Okay, this is part 2, and before I get into our stock picks, I just wanted to show you the volume profile chart in a little more detail to give you an idea of what I'm looking for on Monday. First of all, this 12.10, 12.13 level on the S&P futures contract. This is S&P futures, not the SPX, which was in the last video. But it's pretty close to becoming the point of control, and I think another day's action worth will shift it to the point of control. Now, whether that means basically that we see buying immediately off of that level, it may or may not be, but if it does happen, I would feel comfortable buying this market with a stop under basically the intraday low from yesterday, I believe, which was, I don't think we printed a new low today. So I think we have an opportunity for some more upside. If this point of control shifts, this overall composite point of control, if it doesn't, then I would say back down to this 1190, 1185 level on the S&P futures contract. That's around 1195, 1200 on SPX. So, there's an opportunity, and for an upside target, I would say November's point of control, basically around 1245, 1250 on the S&P. So, I think there is opportunity for the upside if we can get in at these levels with low downside risk, but we have to wait for it first, and I'm sure if we do continue to trade in this range, it will happen on Monday. So, and I want to show you the volume profile for the week on the S&P. Okay, I know this chart is dark, the background. Hold on. Not anymore. If this chart is easy to read, I've received people or comments saying that this chart's harder to read. I increased the font a little bit. I can increase it more. I don't mind which chart to use. I just have to manually put in the point of or the volume profile levels in the other chart, and that's fine. It's just a little more time consuming. So, but whatever you guys want is what you'll get. Just let me know. But the point of control, let's get back into this. The point of control for the week, finish at the top end of the range. So it's hard to say that we'll have a buying opportunity, or I'm looking for a buying opportunity on Monday, basically off of these levels. I'm not. And if we saw the point of control at the bottom of this range and we closed positive today, maybe that would change. But for right now, it's looking negative. For the week, we obviously ended negative. It finished negative. There was no bullish development that formed at the end of the week. So it's really, we were sellers at the beginning of the week, and it worked out for us. So if you made money on the short side, good job. I took some profits today. I mitigated risk. I made sure that over the weekend, if there was a spike in the market come Monday, that I was prepared for. And likewise, if there was a big downdraft, I wouldn't catch all of the move, but I would definitely catch some. So let's get back into our names and some potential opportunities. First things first, AT&T. Now this is a slow mover, and it's a big dividend payer, around 6%. But what we're seeing is we have our value area, which represents the blue lines, value area low and value area high, and our point of control. And right now we're hovering above the point of control, and it looks constructive. But what I like the most about it is the last time, which was back in, looks like late October, the AT&T came down to the point of control and had a nice bounce off of it. And today we had, there was decent buying at the lows. It wasn't anything special. But what I like is, if this is a name you like, you can buy right now with a stop under the point of control. Now, if you don't mind taking on more risk, then you can have a lower stop, and you could even put a stop below the swing lows back in August and September. It's up to you. The percentage risk isn't too bad. It's what, about 5-6%? I don't know, I'm not doing the math on the top of my head, but it's not too bad. And of course, when this comes down, the dividend gets bigger. I like to use AT&T as a name to sell puts, at the money puts, and sell calls if I have to buy the shares, because I think that dividend, one, it puts a floor on the stock, and it's a way to collect, including the premium, by selling puts and calls, around 30% a year if you do it right and if you are aware of the levels trading off of. So it's, for a slow mover, it provides pretty good returns. So I would suggest AT&T is a buy. If you want to put a stop right under the point of control, that's fine. It may come down and knock you. That's the only issue. The point of control, it's not a definite stop or a definite level. It can overshoot just like any level, but it's definitely a reference point. And with a slow mover like AT&T, I don't think it's a bad thing to have to start scaling in, if you don't already own this name, and have a stop below the swing lows in August and September. So let's move on to DDI Corp. And I covered this last night, saying that we weren't getting any, basically we're looking for a close above this point of control level, and we got it today. And no, the volume was horrible. This is a very, look at only trades average around 200,000 shares, so it's not like there's a lot of volume in this name. But I bought some today. I didn't buy a lot, but I bought some, and the reason why is because I can have a stop right under this trend line, or right below 875, and my expectations are we're going to see a break higher, and my target is $10 to $10.25. So it's about a 10% move in expectations, which isn't too bad. And by year's end, that's definitely what we're looking for. The quicker, the better. If it gets up to the value area around 1050, I would be looking to take profits around 1040, just below, just to be safe that you get a fill. So this name looks good, and it looks like there's some more upside, and I like it a lot because your risk is well defined because of this trend line. So DDI Corp looks good. Okay, now let's cover First Solar, and we've covered this a few times now. And what we're looking for with First Solar, hold on one second. Sorry, I just realized the size of the chart. I just put a few of these charts up. I just updated them, and the size was incorrect relative to my recording dimensions, and that's not cool for you. So sorry about that. But First Solar, I think this is... Sorry about that. Hold on one second. Okay, First Solar, it looks like it's bottoming, and the reason why I say that is because the point of control for the year is right at these levels, and this is obviously it's speculative and there's no guarantee, but I feel like via volume profile, your risk is definitely manageable, and I think you can have a stop below these recent lows and with expectations of a breakout. Now, the targets aren't great. Well, there's pretty good upside. It closed at 45.44 today, and our upside looks like $53. That's our first target, and that is the point of control going back to October. And then $60, which was a swing high, and it's also basically the top of a high volume area that basically consists of all of this price action. So $54 and then $60 on First Solar, that's pretty good upside because I feel like your risk is very limited, especially let me zoom in for you, that if we start poking, you can see the market, or First Solar, it's traded relatively well with the point of control. You can see in this 5-day period, it's 6-day period, it held above and closed above the point of control all 6 days, whereas this week, or the last 6 days, 7 days, it's literally the point of control has been the ceiling. So if it starts poking its head above, just like we're seeing in DDI Corp, this could be a good one, and I just don't take it off your radar. If you want, the point of control is at let me get an exact level. 46.35, around there. So what we're looking for is a close above 46.35, and if we get that, I think that's your signal to go long, and let First Solar tell you what it's going to do. By buying, you've already made your trade, and now your job is to hold and to see if it can get to that price target of 54 and then ultimately 60. Would I take profits at 54? Of course I would. That's discipline. That's a $9 or a $10 move on, an $8 move on a $45 stock. That's pretty impressive. So it's just exercising discipline. It looks good. I really can't say anything bad about this. Other than, I don't think the fundamentals support. I think a lot is priced in, and with the point of control being at these levels, I think it's okay to take a shot at this. Okay, now I'm going to cover HG, Home Depot. This, I wish I could say I caught this back at the lows, because actually, let me prove a point about how consistent volume profile is. Okay, quick volume profile chart of HG. You can see what happened at these lows. Bam. A beautiful bounce right off the point of control, 28.50. Sure, it overshot a little, but who cares? If you are watching HG on these days and we're aware that the point of control for this 3-year or 2-year range, 2-year range was at, we're at these levels, and then you saw buying come in at these levels, even if you caught it $1 higher, you are well ahead of the game. And if you want to talk about value investing, there's your bone, because that is what value investing is. You're looking at multi-year volume profile charts, and you're trying to buy the point of control area, whether if it's in the appropriate area or the bottom of the value area. So this is textbook, and I can't stress it enough that volume profile, it's the key to trading successfully, whether it's long or short. So back, you can see, and we'll just keep using this chart for Home Depot, but I want to zoom in. Let's see, zoom into what's going on now, and you can see the point of control is right at the top of the range, and it has potential to break out from here. It's now, it didn't do it here, but it was also, this is really where the point of control formed, and now that we're back above, or back at those levels, we are trading. I'm actually going to use the other chart. We are trading above it. We're holding above it. Today we had a nice bounce. Our lows were at the point of control, just like yesterday, and we bounced both times. So it's hard for me to get excited about Home Depot after it's ran like this, and it's also hard for me to get excited if it falls below this, say, $37 level. But if you want a cheap shot and a potential for breakout on Home Depot, and I didn't catch if it was going to be an all-time high, but this looks like a trading opportunity, and I think you can have your stop under these lows with expectations of a move higher. Maybe one thing you can do if you're familiar with options is use a call spread. Go out 3 months and buy 39 by 41 call spread, a 40 by 42 call spread. Try to get a call spread where you're only paying for a third or maybe a quarter of the spread with some upside potential, and your downside basically controlled. Your risk is managed. And if Home Depot bounces back below this $37 range, you can just close out that position for whatever the spread's worth. Or if you're just long shares, if you just like buying shares, same thing. And I think if this 37 level breaks down, you'll have an opportunity to buy it lower. Now, one thing Home Depot could do is just trade sideways like it did back in the beginning of 2011. So it's not like this thing's just going to keep going. It may, but Home Depot it's a pretty slow mover, so I doubt it will. And it has moved $10 off the August lows. So this is just another example, though, of a trading idea. Okay, let's cover Marvell Technology, and we're seeing, now this isn't as bullish, but it could be a turnaround, and turnarounds lead to pretty good upside. So what we're seeing here is we see our August lows, and since then we've made higher lows and higher highs, which is good, but we're kind of getting this pattern, and what we're looking for here is a breakout from this big consolidation zone, a move higher, or perhaps a move just up to the value or a high, which is around $16.50. So I wouldn't. It's tough to get behind this name right now. The volume yesterday and today were heavy. They were definitely above average. Yet I think today's volume was so heavy because yesterday it was a huge gap lower and trade lower, and today it capped higher and it closed 6% higher for the day. So I think that's why the volume has been so high for the last few days. But, and I guess necessarily this doesn't have to be just a long, but it looks like it's an opportunity to get involved in this name, and this could, for example, if this trend line breaks, which it is a trend line, and it starts moving lower, you will probably have an opportunity for $13 or $12.50 to the downside, and that's a pretty good trading opportunity on a $14, $15 stock. So there is opportunity in this name either way. Just watch it, keep it on your radar, because I think this name provides opportunity. Okay, now let's cover Monsanto, and this is a tough name to get behind in expectations of a breakout, but I think that's what may be brewing. As far as managing your risk, I feel like we have some great levels to look at, and our first level is this point of control, which we had a nice bounce off yesterday, up a 1.25% today. But you can see that this point of control, it's been a pivot level for this stock, and this, if you're bullish on agriculture, this is a good trade. And I don't know much about the fundamentals relative to the other ag names, but it's performing the best by far. And what we're looking at here is if we are going to get a breakout, then Monsanto should stay above the 69 level. So if you want to get involved and have a stop below 69, I think that's a good trade. But just like every other time, it has a tendency to overshoot this point of control. So it may overshoot it some, which is why I suggest below 69 rather than right below the point of control, which is around 69.50. So, and if you get stopped out, that's fine too, but we like to see that these moving averages, they're pointing up. That shows you that buyers have some momentum to the upside, and we're looking to buy this name on weakness. Whether this does break out, I don't know, but worst case scenario is you probably have an opportunity to sell this at 75, right now trading at 71. So not a great trade in terms of potential, but if this name does break out, I'm sure that this higher base that is forming is your level to look for. Okay, now Pepsi, I really like what's going on with this name. And although we've seen some big swings relative to the name in the past couple of months, I think this is an opportunity, and it's an opportunity right here, right now. This point of control around 63, we had a nice bounce off of that level today, about $1 worth of a bounce. So for a name that moves very little, that's a pretty good bounce, and I think you can buy this name now. I don't think that I think you can have a stop below the value area, even though it was completely breached in the August to October time zone, now that it's starting to move higher, I think that it's okay to have your stop really right below these current lows around 61.50. So call it 61.40 is where you should put your stop. And expectations, 66 to 67 on the upside, the value area high, and ultimately for Pepsi to get into this congestion zone where the point of control for that range is probably, I don't know what the exact number is, but it's probably around 68.5 to 69. So this looks like a decent opportunity, a place to put your money while the market deals with its uncertainties. So not a bad idea. And the last name I'm going to cover is USB, US Bank Corp. And this isn't a name, this is considered a super regional. It has some decent exposure to the U.S., to multiple regions, but it's not exposed to the outside of the U.S. Hence, it's a regional. So what we're looking at here is this sell-off back in August, September, October, where price was below the value area. That was this sell-off. Let's get the right tool. This sell-off and rally is a great example of a rejection, and basically these prices were too cheap. The value was beyond reasonable, and it got bid up back into the value area level. Our value area low around 23.50, point of control 25, and value area high around 27. This is building a base right above the point of control. We could see a nice breakout to the upside to test the top of the value area around 27. And if so, these levels are not a bad place to get involved. I would have a tight stop on this right below 25. And the reason why is because if it breaks 25, which it's held for the last couple of weeks, then it's telling you that you can probably buy this back around 24, maybe around 24.50, where we see this congestion of moving averages. But basically, why hold and see this name come down when you don't have to, when you can sell at a higher price, even if it's a loss, it's a small loss, and you can always buy back at lower levels. I would sure love to buy this name at 24, 23.5, but that's not where the price is. The price is at close at 25.38. I think you can have about 45 cents worth of risk, about 2%, with an upside of about 6%. So a 3-to-1 risk reward rate, or reward to risk ratio, isn't bad. And I think it's an opportunity. I hope these names give you a little bit more insight to volume profile and how to look for opportunities, and realize that it doesn't necessarily matter if you're going long or short. The idea is you're looking for trades against these levels, because these levels are proven support and resistance level, because this is where people have the most money at stake. So I'm going to have one more video coming out, and it's just going to cover the euro, gold, and silver, and I guess the dollar. It's going to be short, but if you want to watch it, it's going to be there for your viewing. So anyways, guys, I hope you have a good weekend. I hope these ideas help. Make sure you take notes on the levels. I hope you did. If not, you're just going to have to go back and review the video. But I think these are some great opportunities for you to make some money, and I'll see you on Monday.